Investors. So I called up a friend of mine today and I said, I got an idea for a show topic. And I just need you to tell me whether or not you think it's misogynistic or not. And he said to me, yes. And I'm like, you haven't even heard what I have to say yet. And he says, all right, go ahead and give it to me. Well, that topic is why women tend to generate better returns over time than their male counterparts do. Why are women better investors? And what can we learn from these long 20-year like studies over this topic? And I got a couple articles that go over these points and kind of shine a little bit of light on why they tend to generate better returns than men. And then next, I'm going to go over a stock that's really badly beaten down. It's come from, I think, the high 80s to now today it was $21, and that's Pinterest. They're reporting earnings next Wednesday. And if you watch this channel, you know that I'm a bit of a value investor. I really like a good value. When I look at this company's fundamentals and when I read about this company, I think, you know what? This company is kind of like what is viewed as like a pandemic play, I believe. I believe it's coming down the way that Peloton or DocuSign or Netflix has been pounded, but I don't think this company is like those companies. So we'll go over their valuations. We'll look over some analyst reviews of it. And then I'll tell you how I'm going to play Pinterest going into earnings. So without further ado, let's get started. So the Motley Fool did an article updated on March 9th of 2022. And it showed that it was about women investing. And 20 years of research and statistics get summarized. And it said that 67% of women are now investing outside of retirement compared to 44% in 2018 to Fidelity's 2021 Women in Investing study. Women also consistently post better investing returns than men, both as individual and investors. And so their key findings from this study were, and it was a 20-year-long study from Fidelity, is that women lack investing confidence. Only 9% of women think they make better investors than men, despite research showing that they earn consistently better returns. Women's investing confidence increases with age. 46% of millennial women feel equipped to handle investments, while 60% of women in the silent generation feel the same. So they're not young and throwing their money everywhere and losing their shirts the way, like a more risky guy might do. They start off slow, and then when they really get the hang of it and they really know what's going on, they're like, all right, I can risk a little bit more now. And that tends to be a really a nice way to go about this. Women tend to invest more conservatively. The average woman keeps 68% of her portfolio in cash and cash equivalents compared to 59% of the average man's portfolio. Women get better investing returns than men. Some research shows a difference of up to 1% better investing returns over time. And that's because women are less impulsive investors than men. And reports show that women make fewer trades and even log in their investment accounts less often than men. In the Forbes article here, it goes into how you can, what habits can you adopt to make you invest more like a woman. And so they go into why women are better investors. And it says, studies show that women spend more time researching their investment choices. And while they do take on less risk than men when it comes to investing, that doesn't mean they're risk averse. Rather, they're simply more likely to take on appropriate levels of risk with their investments than men. And that goes into what we were saying earlier, that when they're younger, less risk. As they get older, maybe a little bit more risk, but they've researched it. They know a little bit more what they're doing by the time they're doing stuff like that. Both of these findings make for better investing outcomes. This prevents women from chasing hot tips and trading on whims, behavior that tends to weaken men's portfolios. And because women are more likely to have a good age-based asset allocation, they achieve proper diversification to help protect their money regardless of market conditions. This may help women with another investing best practice, which is holding investments for the long term. Women are apt to stay calmer than men in down markets. And that's why I'm bringing this up today. Because, guys, we got to stay patient and we got to stay calm. You have a good stock. It's a good company. Invest like a woman. Okay, this protects them from locking in losses when the market takes a momentary tumble. What's more, men trade 45% more often than women do. And although men are more confident investors, they tend to be overconfident. By trading more often and without enough research, men reduce their net returns. So, like, women don't run around saying, "Hey, the yield curve has flipped. I guess I'm going to sell out all of my Microsoft." And they tend to just always just drop in every 2 weeks, just drop their money into some conservative index fund until they get a little bit older. They don't worry about things like, "Oh, I think a recession is coming. I think the interest rates have gone up. I think inflation is a little bit high." They just stay the course and dollar cost average in. So here are the systems that you can use to invest like a woman. No matter your gender, you can recreate these positive investing characteristics by following some simple guidelines. Whether you're picking stocks for a taxable investment account or choosing asset allocation for your 401k, setting parameters ahead of time ensures you navigate the market deliberately rather than reacting to the latest whims of financial news. And like I was talking about earlier, the yield curve and recession and just there's no point in doing that. Just get a good company that generates money and stick with it. For example, you might opt for automated investing using strategies like dollar cost averaging. With dollar cost averaging, you invest fixed amounts at a regular cadence, say $100 every month in an S&P 500 index fund rather than trying to buy in all at once at a low price. Now, there are studies that go back and forth on this sort of thing, and really to me, this is dependent on what the direction of the market is going in. So right now we're in a bearish direction, so dollar cost averaging is really nice. But if we're in a bull market and things are going straight to the moon, you probably want to put it all in at the bottom and ride it up. So it's there are pluses and minuses to dollar cost averaging versus lump sum investing, but it's largely dependent on the market sentiment and essentially the Fed. Are they soft or hawkish? Over the long term, this may actually help you buy more shares for a lower average price without the stress of trying to time the market, regardless of exact purchase price, though it ensures you stay off the investing sidelines and get your money in the market. So you get the point. So basically, what these articles illustrate is that just stay invested, don't try to time the market. If you don't really know exactly what you're doing, stay nice and conservative, stay diversified, and just kind of and ignore all of the white noise, the yield curve, the recession talk, the China's got a lockdown right now. There are just different things that we can filter out and just keep investing in strong companies with strong earnings, and things will work out in the end. And so speaking of strong companies with strong earnings, I first want to go over Pinterest here. And now, before I get everybody switching off of this channel, because I'm going to talk about Pinterest, the first thing I'm going to start off with is their balance sheet. And I need you to see this. This is incredible to me. In 2019 to 2020, the company grew by 48%. And then from 2020 to 2021, it grew to 52%. Now, a lot of people thought this was because of the pandemic, and a lot of it was because of the pandemic. However, this company seems to be fighting through this, and though it's not growing at the same pace, say, with monthly active users, they found different ways to monetize. And because they're finding different ways to monetize, the company went from losing $3.24 a share in 2019 to making 49 cents a share in 2021. So this company has now gone profitable. Since it's profitable, it now has a price to earnings ratio. The price to earnings ratio is 42 with a forward PE of 20. So that's very impressive. So this company has come down a long way. It's come down from a high of $81 all the way down here now to $21. I look at this company and I see something that has a market cap of 15 billion and an enterprise value of 12 billion. Market cap is the shares outstanding, 662 million, times the share price of $21. But I see that it has an enterprise value of 12 billion. What that tells me is enterprise value is market capitalization minus their debt plus their cash on hand. So this tells me either this company is really flush with cash or it's got very little debt. So I went into their balance sheet to try and figure out which was the case. And so if I look at their balance sheet and I want to say, okay, how much debt does Pinterest have? Let's see. Total debt, nothing. Okay, now we have a company whose share price has been crashing from $81 all the way down to $21 in a very short amount of time. And this company went from losing money to generating money. This company's forward price to earnings ratio is 20. This company has no debt. I'd say that this company would have to work very, very, very hard to go out of business. And I think it's worth a closer look at this Pinterest. And I went ahead and just started with the fundamentals so that we can start taking some of what these people are saying seriously. So what exactly happened to Pinterest and why did it go down? In this article, they try to illustrate where Pinterest stock stands ahead of earnings. And it says the markets have severely punished Pinterest stock with the company reporting sluggish active user growth. And this is the problem. It's the monthly active user growth is not as strong as what it had been during the pandemic. However, it would come down, say, year on year, but the thought is that when the comparables, the comps, are not towards the pandemic time, but towards now, that monthly active user growth is actually going to flip and go up. This is not Peloton, folks. In fact, over the past 6 months, Pin stock has slumped by nearly 60%. After the massive correction, though, it seems that the stock is in oversold territory. And so with Pinterest expected to report its first quarter of fiscal year results 2022 on April 27th, next Wednesday, there is a buying opportunity for potential investors. And so what was the monthly active user growth that's actually come down? So this is enough. So this goes into detail about exactly how much the user growth has come down. So that active user continued to slide as it loses growth momentum sparked by lockdowns. So you can see here that the monthly active users in the quarter four of 2020 was up 37% year over year, then 30%, then 9%, and then now it's down negative 6% year over year. But it's got a pretty tough comp over here, right? It's got a tough comp against this 37%. And sooner enough, you're going to have this comparison. Instead of being up 30%, it's only going to be up 1%. And so when they start comparing against this quarter, they think that Pinterest is going to go up. As you can see in this chart, Pinterest's monthly active user count has fallen from 478 million at the start of 2021 to 431 million now, a decline of 47 million active users throughout the year. That's a significant drop. When I look at the Morningstar report here, it's got, at the time of this release, it had a last price of $24.51. It says the fair value estimate for Pinterest is $60, giving it a 5-star rating. And this was dated 4 February 2022. And here's the justification for this lofty valuation. So Pinterest posted strong fourth quarter 2021 results, which exceeded consensus estimates on the top and bottom line. While the firm's monthly active user count declined, this impact was more than offset by higher revenue per user as demand from advertisers remained strong. In addition, the impact of Apple's iOS changes with focus on data privacy was not significant. So the Apple iOS change that hammered Facebook has not touched Pinterest because Pinterest uses a different way to reach their user base, and they do it using what's called full funnel tools for broad-based and direct response marketing. We are pleased with the firm's strategy to continue investing in new features and expanding its reach into new international markets to drive further growth. While these efforts will pressure margins in 2022, we expect profitability to improve in 2023. So though the forward EPS looked like it was a bit lower, this article is saying, well, maybe it won't drop immediately in 2022, but we think that by next year it should start coming down a bit more. And beyond, as user and content growth from those investments attracts more advertisers. With lower user growth assumptions for this year and the impact of investments on margins, we have lowered our fair value from $60 from 67. The total fourth quarter revenue came in at $846 million, up 20% from the prior year as average return per user increased 23%. So their ARPU, average return per user, was up 23%, and that offset the 6% decline in monthly active users. So they go on to state their bull and bear case for Pinterest. And the bulls say Pinterest can increase user monetization with better shoppability of the platform, from live pricing to visual searches. So they think that this can monetize even better. And we're going to go into Pinterest in just a second. I'm going to show you how they can monetize and how they are monetizing. Because there are a lot of people that use it that don't even realize that they're monetizing at all. But there is advertising in there. It's just sneaky. You'll see it. Pinterest user growth increases as its market increasingly prefers platforms that place high importance on data protection and filtering fake news. So take a note of that, Twitter. Maybe just post whatever you want isn't the smartest thing for getting advertisers. Okay, so Pinterest still has room to attract a wider base of users, potentially increasing the platform's appeal to advertisers. So what do the bears have to say about Pinterest? Well, the bears say that Instagram is a formidable social network that could poach Pinterest users as it releases its Pinterest equivalent called Collections and expands its visual search capabilities. So this is interesting. This might be something to keep an eye on if you're like a Facebook shareholder or would like to be a Facebook shareholder. Facebook has a nice valuation, and if this thing takes off, this might be a nice addition to Facebook's portfolio. Pinterest cannot effectively monetize its international user base after years of near adless feeds for those users. And tight e-commerce competition could lead to a hefty spike in R&D expense that doesn't pay off. So let's have a look over here at Pinterest and see exactly how they monetize. So right now we'll look at, say, shirt for women. Let's see how they would go about monetizing this. Let's see who's pretty well put together. How about Eva Longoria? She dresses nice. Okay, so let's see if she's on here. And there she is. And so you'll see puretrend.com, Zimbio.com, put that one, outfitidentifier.com, Zimbio again. What is this? Denimology. So let's click on Denimology and see what they do. So you look over here over Eva here, and she's got her sunglasses and glasses and jewelry and shirts and pants. And this place will tell you where she got all this stuff. So let me just see if I click on her pants. You can, I guess, shop pants at different places. And so these people are paying to, if you click on Eva's pants here, you can go to Shop Simply and buy it for 59 bucks. You can go over here and buy it for $21. I like this place better, although the holes are bigger. Okay, if you want Eva's shoes, let's see. So you get the point. You can go to VistaCam and get them for 50 bucks. You can get high heels over here for $69. And so that's what, this is the way that Pinterest monetizes. I know a lot of people go to these for recipes and that, and so it's kind of difficult to see how they're monetizing through that. But this is the way they're doing it. They're advertising for some of these retailers. And so how am I going to play Pinterest through these earnings? Remember, they report earnings next Wednesday. So the way I've decided to try and play Pinterest through this earnings is I just bought a call contract. And this is the most conservative way I could think of doing this, because buying the stock outright to me is really risky, especially in light of what just happened in Netflix today, because they're the same type of thing. Netflix needs subscribers. These guys need monthly active users, and you just never quite know how the street is going to react to this. What if their monthly active user count goes down even further than anticipated? This stock could crash from $21 where it is now down to like $11. You never know. What if it's suddenly not profitable where it had been profitable? This thing could really crash down bad. So if I had just bought 100 shares of it, and at the time I executed this contract, it was $22 a share. If I bought it at $22 and it went down to $10, I lose $1,200. But buying this call contract caps my loss at $305. If Pinterest finishes below $20, on the 6th of May, this contract is worthless if I let it go to expiration, because why would I pay $20 for a share when the market is selling it for $19 a share? That makes this contract worthless. However, if Pinterest has really nice earnings and it goes back up to, say, just for the sake of easy math, $30, well, the intrinsic value of this, if I got it for $20 a share and now it's $30 a share, would be $10 a share times 100 shares, or $1,000. But I don't make $1,000 because I already paid $305. So I make $695 on this contract at expiration. And so that's how I plan on doing this, because I think this is a most conservative way to go about this. If the stock goes up, and I think it will, then I'll have the option to either purchase these shares for $20 or exercise or sell my contract to another investor and gain not only the value of the price of the shares above the current share price, but also get the value of the time and the volatility that this contract holds. So even though it might only go to $28, I still may be up like $500 on this contract. But either way, I have the option to buy the shares or exercise or sell the contract. And so that's how I plan on playing Pinterest through these earnings. All right, so that's it. I just went over why women make better investors than men, and that's important for us to recognize during these types of, like, a bunch of bad news and down market, why it's good to invest like a woman. And also went into Pinterest, which I think is a pretty underrated stock, and one that's a little bit overlooked, and one that I think, I made a little move on. We'll see what happens with that. All right, until next time, we'll see you then. Bye.
Okay. It's a girl thing. I would say it's more of a girl thing.
Well, I would agree. That's why I was just asking. That's why I went to the source here to see if you guys like it.
Yeah, and I don't think that Pinterest is going anywhere. Shantae Wadley, your friend, Heidi's really good friend, loves Pinterest.
Okay.
And in fact, we make fun of people at my work because they'll come into my store and say, "Do you have this plant or this plant or this plant?" And I said, "Let me guess, you saw that on Pinterest." "Yeah, how did you know?" I'm like, "Everybody's on Pinterest. That won't grow here,
All right.
It's more like dreamy, like the stuff that gets posted on there is just beautiful.
Okay. Well, thank you for your input there.
Sure.